Right now, Strive Inc., trading under the ticker ASST, is priced at $1.05, and it is currently down 2.79% in this morning's trading session. The stock has been volatile, hitting a high of 1.12 and a low of 1.03 since the opening bell, all on significant trading volume. And right away, we have to stop and address the central confusion that is driving this stock. The expectation for many investors when they hear the name Strive is to think of the anti-ESG asset manager founded by Vivek Ramaswamy, the firm known for its exchange-traded funds like DRLL and its mission to depoliticize corporate boardrooms. The reality is that what you are looking at today with ticker ASST is a completely different animal, and failing to understand this distinction is where most investors are making a critical error. What you are trading today is the result of a September 2025 reverse acquisition of Asset Entities, Inc. This new Strive Inc. has pivoted its entire corporate strategy. It is no longer just an anti-ESG fund manager. Its new primary objective is to become the first publicly traded asset management Bitcoin treasury company. This is not a subtle shift. It is a fundamental transformation of the business model. The company is now, first and foremost, a vehicle for accumulating Bitcoin on its balance sheet, a strategy financed through complex and aggressive capital raises. Let's look at the price action in the context of this new reality. The stock is coming off an absolutely brutal 52-week range, from a high of 13.40 down to a low of just 34 cents. This isn't the chart of a stable asset manager. It's the chart of a company in the midst of a radical, high-stakes transformation. The general belief is that this is a re-rating of the old Strive business. The truth is that the market is attempting to price in an entirely new, highly speculative venture that is part Bitcoin proxy, part acquisition vehicle, and part asset manager. Just 3 days ago, on November 14th, the company released its third-quarter financial results, and this is where the new strategy becomes clear. The company reported a GAAP net loss of $192.3 million, or 22 cents per share. But, and this is crucial, management pointed out that 179.3 of that loss was from non-recurring or non-cash items. The non-GAAP adjusted net loss was a much smaller $13 million, or about a penny per share. This tells us the company's operations are being completely overshadowed by the financial mechanics of its transformation. And what are those mechanics? First, Strive is aggressively accumulating Bitcoin. As of November 7th, the company reported holding 7,525 Bitcoin. This is being funded by an equally aggressive capital-raising strategy. The company raised $762.6 million through a PIPE financing and warrant exercises. And just last week, it raised another $149.3 million by issuing 2 million shares of a new variable-rate Series A perpetual preferred stock, which trades under the ticker SADA. This new preferred stock carries an initial 12% dividend, a very high cost of capital that speaks to the perceived risk of this strategy. So the stock's movement today isn't just about market sentiment. It's about investors trying to digest this flood of new information. The company is taking on massive leverage and dilution to buy a volatile asset, Bitcoin. The expectation is that this is a simple buy Bitcoin company. The reality is far more complex. This new structure, with warrants, preferred stock, and common stock, creates a complicated capital stack that investors must understand. But the story doesn't even end there. On top of the Bitcoin strategy, Strive also announced it is acquiring Semler Scientific in an all-stock deal. This isn't a Bitcoin company. Semler is in the healthcare space. Strive's plan is to install new leadership at Semler and build out a new preventative healthcare business, a model they are explicitly comparing to Ramaswamy's other venture, Roivant Sciences. The company's stated plan is to build the separate business up and potentially monetize it later, all while the main Strive entity remains focused on its Bitcoin treasury. This adds another layer of complexity that the market is struggling to price. Is ASST a Bitcoin play, a healthcare spin-off play, an asset manager? Right now, it's all three, and that lack of a clear identity is a magnet for volatility. This brings us to the short seller activity, which is mandatory to understand. Given the complexity, the high-cost financing, and the radical pivot, this stock is a prime target for short sellers. And the data confirms this. According to recent data from Fintel, Strive has a significant short interest. One report places the short interest as high as 32.74% of the free float. Another, more recent report suggests a short float around 18.40%, with 56.88 million shares held short. Either way, these are exceptionally high numbers. It signals that a large and likely institutional block of traders is betting heavily that this entire strategy will fail. The short seller thesis is not complicated. They are looking at the 12% dividend on the preferred stock and seeing a company desperate for cash. They are looking at the acquisition of a healthcare company by a Bitcoin-focused firm and seeing a lack of focus. They are betting that the massive dilution from warrant exercises and stock offerings will crush the price of the common stock, or that a significant drop in the price of Bitcoin will expose the company's leverage. The borrow fee rate, the cost to borrow shares to short, is reportedly at 5.77%. This is elevated, meaning it's not free to short this stock, but it's not at a prohibitive level that would stop a determined short seller. So what can you do as an investor? First, you need to verify this information for yourself. You can look up short interest data on platforms like Fintel, Finviz, or by checking data provided by your own broker. You should look for two key metrics: the short interest as a percentage of float and the days to cover. With ASST, the days to cover is reportedly very low, at 0.49 days, because the stock's average trading volume is so high. This is a critical insight. It means that despite the high short interest, those short sellers could, in theory, buy back their shares and close their positions in less than one trading day. This makes a sustained retail-driven short squeeze very difficult to achieve. A low days to cover means the shorts are not trapped. This is a very different setup from other so-called meme stocks where high short interest was combined with low liquidity. Here we have high short interest and extremely high liquidity. What's your take on this? Is the heavy short interest on ASST a sign of smart money sniffing out a failed experiment? Or is it a case of market makers hedging against all the warrant and preferred stock financial engineering? Let me know your opinion in the comments. This dynamic is also being reflected in online discussions. On platforms like Reddit and TradingView, the sentiment is predictably all over the place. You have technical traders trying to map Elliott waves, looking for a 10x gainer. You have retail investors excited about the Bitcoin treasury play, comparing ASST to the early days of MicroStrategy. And then you have more skeptical investors pointing to the massive dilution and the confusing Semler acquisition. This stock is a battleground, and the retail crowd is a significant participant in that battle. So let's step back and look at the business itself. What is Strive Inc.? Originally, it was an asset manager founded in 2022 to counter the influence of ESG-focused investment firms. It successfully launched a suite of ETFs and, according to its website, grew to manage over $2 billion in assets by challenging companies to focus on shareholder value. This is the business that many investors still think they are buying. But this core business is now part of a much larger and completely different public company. The new public company, ASST, is a successor to Asset Entities Inc. via a reverse merger. While it still operates that asset management business, its primary balance sheet activity, its financial reporting, and its headline-grabbing news are all about Bitcoin accumulation and a new healthcare venture. Looking forward, the picture is incredibly complex. The bullish scenario is that the company is using its stock as a tool to acquire as much Bitcoin as possible before the next major price appreciation. If Bitcoin's price rises significantly, the value of Strive's treasury holdings could far exceed the dilution created to acquire it. In this scenario, the Semler healthcare venture gets built up and spun off, delivering additional value to shareholders, and the core asset management business provides some small, steady cash flow. The bearish scenario, which the short sellers are betting on, is that this house of cards collapses. A stagnant or falling Bitcoin price would make the 12% dividend on the preferred stock an unbearable burden. The Semler acquisition could prove to be a costly distraction, draining cash and management focus. And the constant issuance of new shares and warrants could send the common stock into a death spiral of dilution, where the price is pushed even lower to attract new capital. The company's own management forecasts that the asset management operating business will be somewhere between a small loss and a small profit in 2026, which tells you that the original stable business is not what will drive this stock. The immediate reality for ASST is that it is a highly leveraged, speculative-grade proxy for the price of Bitcoin, complicated by a new venture into healthcare and funded by expensive dilutive financing. The expectation that this is a simple anti-ESG fund company is completely wrong. The reality is that this is one of the more complex